Welcome to today's webinar, How to Get in Front of Investors in the Cannabis Space. I'm Cassie Pallison, Head of Corporate Marketing at Atrium, and your moderator for today's webinar. Before we get into the webinar logistics and introduce our speakers, I want to tell you a bit more about Atrium. Atrium is a full-service corporate law firm enabled by modern technology. Founded by Justin Kahn and backed by Andreessen Horowitz, YC, General Catalyst, and more, we're trusted by over 400 of the top startups and hypergrowth companies in and outside of Silicon Valley. Now on to logistics. The webinar will roughly be 45 minutes of content and Q&A. Today's speakers are Kyle Lui and Jason Kornfeld. I'll let them introduce themselves a bit.
So I'm Jason Kornfeld. I'm a corporate associate here at Atrium. My practice is just a general corporate practice that ranges from formation through fundraisings and through exits. I've worked with tech companies throughout my entire career. I was in big law before this, and for the last few years I've been tailoring more of a startup playbook for cannabis companies that really hasn't been readily available out there. So about half my practice now is dedicated to working with just cannabis companies, and then the other half I still work with tech companies.
Hello, everybody. Kyle Lui. I'm a partner at DCM. I've been at the firm for 5 years, focused on consumer internet, enterprise software, and fintech. A bit about DCM. We are a Silicon Valley-based global venture capital firm with about $4 billion under management. We were amongst the first major Sand Hill Road firms to invest in the cannabis space with our investment in Ease, in which we led the seed Series A and co-led the Series B. Our portfolio comprises of over 400 technology companies around the world, with the core focus being North America, China, and Japan. And very happy to be here to talk about the cannabis space.
So we'll first kind of talk about fundraising process and nailing the pitch. Then we'll discuss, one thing that everybody really wants to talk about is how do you find investors that are willing to invest in the cannabis business. Kyle will give some information on sort of what DCM looks for and what's really exciting them about the cannabis market. How to look at valuing your business, what sort of makes you more attractive versus might be more that might devalue your business. Then we'll do a little bit of high level discussion of sort of how regulations are sort of affecting the fundraising process. And then if we have some time, we'll dive into sort of maybe just like a quick firecracker round on sort of where we think the market's going in the US and maybe some interesting opportunities internationally. And then end with Q&A.
That's good.
Okay, so let's get started. So the first thing every founder should be thinking about, right, is I want to fundraise. So what should the fundraise process look like? Like, how do I project manage that? And how long should it take? And start to finish, really, what should that be?
I always talk to founders about having the right capital strategy for the right stage of the company. So, it really depends on what stage you're at. Assuming you're at the very early stages, fundraising can take, there's a high variation in the amount of time that can take. I generally say budget about 6 months, but it could be as short as 1 to 2. It could be as long as 9 months plus. And it really is dependent on how much of a focus it is and how much of a priority it is for you. I often hear founders who say, I'm interested in raising capital, but I want to do it somewhat passively or opportunistically, and generally that's when it's going to take much longer. If fundraising is a key priority for you at this current stage, it should really be priority number 1 or priority number 2, in which case you're spending the vast majority of your time on it. And what that means is if you have 10 hours in the day in which you're focused on work, or 15 or whatever it is, that you're spending more than half of your time focused on fundraising. In terms of, so stop there.
No, that sounds good. And I think maybe even to back up a little bit, you sort of made a good point as to like where you are in your business stage, right? If you're like a seed round versus an A, you think that there's sort of a different way of looking at that process, or generally speaking, just like the process kind of stays the same, just maybe one's a little bit more sophisticated in terms of how you think about how you're going to structure your fundraising?
Each round is, they're related, but they're the experiences are very different. So anything before Series A, the vast majority of investors tend to be individuals, whether that's angel investors, whether that's friends and family, and the pitch to those individuals tend to be much more focused on really kind of two or three things. The number one thing is really the individual, the founders and the team. That's important every stage of the way, but it's particularly important at the kind of what I call pre-institutional stage. And the reason for that is there's not a lot of product that's been built. There's not a lot of company historical data. There's companies probably not profitable. The management team is probably not completely built out. So it really is about the individuals. And given that, there are usually a very core set of investors that I recommend very early stage founders to go to. And those are the people that know you well, who have worked with you before, who've known you through personal and professional relationships as the kind of first round, which is why we generally call it the angel round or the friends and family round. As you move later, it moves from where it's story driven towards data driven. And as it moves to being more data driven, then it's about, okay, what have you accomplished with the capital that you've raised to date? What are these milestones? Did you do what you say you were going to do? And do I believe in your future projections in the company to invest at this point in time?
No, I think that's a good point about the differences in where you are in your life cycle. So let's say founders are ready to start going out looking for investors, but they are maybe struggling with how to pitch them. They're getting opportunities to get in the door. But I mean, we can even back up to saying like sending out your deck. Is there anything that you'd recommend as an investor saying, I want to see these things in your deck as a seed company or an A company before I will even think about even giving you an opportunity to come pitch it? Or
yeah, I think that's a great question. I mean, so a tactical thing, which I'm a little biased because I'm on the board of this company, but DocSend is a great resource that lots of founders use to share their pitch decks. And the key feature there is that you're able to track the analytics, you're able to restrict access. I generally don't recommend just sharing your deck in a PDF because you don't know how it's going to get distributed. But that's very tactical. I think that the key, the kind of general answer to what your question is really around, are you getting in front of the right investors and how do you identify whether it's a good fit? And there's a few tactics that you can do. One is see if they've invested in cannabis previously. Two, have they invested in any competitors? You want to steer clear of investors that have invested clearly in competitive companies, but you actually do want to find people that have invested in companies that are comparable and that they'll understand the model of your company. Next, ask them, once you get an intro, simple questions like, have you invested in companies at my stage? Have you invested in companies with, my level of revenue in this particular market? And really sort of get some of that qualification before necessarily sitting down, because when you sit down, you're investing, an hour of your time, and you want to make sure that, you're getting proper ROI from that.
Yeah, no, that makes sense. Okay, so let's say you get some pitch offers. As a founder, what do you want to see in that pitch? Like if you were to give top 3 or 4 qualities that need to come out of that for you to at least pique your interest further and maybe dive deeper into
it. Yeah, I would even step back a little bit and say, like, does your pitch deck clearly outline what your company does or is planning on doing? And you'd be surprised. I mean, I review thousands of pitch decks a year, and a huge percentage of them, it's not clear from going through the 5 to 10 to 15, or in some cases 50 slides, that I actually even know what the company is doing, or I even know why the company is differentiated. And so you want to have a pitch deck that very clearly outlines what you do, why you're different, what the opportunity is, why your team is uniquely positioned to go after this opportunity, and how big this opportunity is. And those are the questions that investors are constantly thinking about when they're reviewing a pitch deck. Why this team? Why this company? Why this opportunity? Why this market? And those things need to be addressed in your pitch deck.
Cool. Yeah, and I mean, because we forward clients pitch decks all the times, and sometimes even as a lawyer, it's hard because I will like to review the pitch deck, and I'll even send it back and say, hey, for what I've heard from investors before, I think you should try to pull these themes out more, so it's a little bit more obvious, or maybe not bury them as much. And it's funny because they get advice from different people, and so sometimes I send it, and sometimes people still look at it. But it's been interesting to see, sort of, generally speaking, though, when I've seen like a disorganized pitch deck, it hasn't been very successful.
Yeah, I think specific to the cannabis space, which is obviously highly specialized. It's a space that is unevenly regulated, one where there's just been a lot of investor attention. It's important to know your audience. So you may want to have multiple versions of your pitch deck. And the reason for that is if you are sending your pitch deck to someone who is who well, who is interested in the market but may not have done any investments in the cannabis space, the focus should really be on educating them on the market itself, and you should have more slides on the progression of the cannabis space, the market opportunity. But if you're reaching out to someone who, an angel investor who's done many deals in the cannabis space, you can kind of just skip all of those slides and really focus, laser focus on what the opportunity is. So it's sort of like you have a intro of people who are kind of introductory investors to cannabis, and those that are much more familiar with the market, and the pitch deck should be tailored differently.
Yeah, no, I think that's really good distinction, because I mean, seeing all the different kinds of companies that we work with, I think there's like a certain kind of investor they really just want to get into cannabis, and especially at the seed stage, willing to get behind the founders, and maybe they've only done one or two deals, so their sort of view of the industry and sort of what they think is going to be successful is a little bit different than somebody who's kind of been investing in the space for the last few years and seen sort of the shift in sort of where they think the industry is going. And so they kind of want to see different values out of the pitch deck, or need different information to get them comfortable with wanting to meet those founders. So I think that's really important, is to really understand your audience. Otherwise, I think it could maybe even show, and you can correct me if I'm wrong, that to the investor that you aren't really positioning yourself to go for what really matters at this point. Okay, so how about let's go to the pitch now. What do you want to see from founders once you give them the opportunity to pitch?
So the number one thing actually that you need to nail is your 30-second elevator pitch. And the 30-second elevator pitch, there's actually two versions of it. Neither of them are actually 30 seconds. The first version of it is 2 sentences. 10 seconds. Like, can you describe your business in 1 to 2 sentences? That is very easy to digest. The second is the longer sort of 1 minute pitch, where you go through 3 or 4, maybe 3 talking points that really augment your kind of 10-second pitch. But I call that roughly your 30-second elevator pitch, because it really depends on how much time you have. And you will always start a longer pitch just with that, so that you are able to level set the person sitting across the table from you on what exactly you're doing, and then you go into your pitch. In terms of the pitch deck, I generally like to see pitch decks that are 10 to 15 slides, because you should be able to describe the opportunity set in that amount of time, assuming you're an early stage startup. If you're a Series B or Series C company, it probably will be much longer, because you have much more to talk about. But if you're a seed stage company and you have a 50-slide deck, you probably want to make it a little more concise. And then you might want to have a handful of slides as backup appendix slides, in case to anticipate investor questions around the market or the financials or the team, that you can then go to if you have those questions. But pitch deck should be 10 to 15 slides. It should concisely walk through those different points that I talked about earlier, and then make it more interactive and open it up for questions.
Great. So one last question, sort of just on the fundraising process and the pitch. What about how should founders think about how much money they should raise? I think you speak to people like So, sometimes I'll hear like Justin say things like, "Oh, hey, you should raise whenever you can raise as much money as possible because you never know when it's going to dry up." But then with companies that might be making, even at the seed stage, like a decent amount of money, even if they're not necessarily profitable, like, should they be a little bit more conservative about how much they raise so founders don't necessarily take as much dilution?
Well, I think it highly depends on what type of company you are building. If you're building a company that has a hardware component, you probably need to raise more. If you're starting a company that is, for example, like a cannabis brand, you probably don't need to raise as much, but you do need to consider what you want. Like any additional capital that you raise beyond your 18-month budget is probably going to go into marketing or different channels to enable sales. And that is actually a way to sort of de-risk the opportunity. And so in that regard, on the margin, if it's a difference between saying raising a $2 million seed round and raising a $3 million seed round, that incremental capital is probably going to be used to hire maybe one or two additional people and probably going into marketing in some way. And so, it's always like a fine balance between capital raise and dilution. For a lot of companies, especially those that already have a product in the market or they've been able to run it pretty capital efficiently, I usually recommend that they don't raise capital until they absolutely have to. For companies where they want to build a massive, $1 billion plus opportunity, more likely than not, you're going to have to raise more capital versus less capital at every stage of the way. So it depends on what industry you're in, what type of business you're building, and what type of company you want to build long term.
Sounds good. Okay, let's move on to finding investors, which I think a lot of people here want to hear about. I think one thing that's unique about cannabis is people love to talk about it, act like they want to get into the industry, but there's still sort of this cloud over really who's openly investing in it. I know there's a lot of funds that, unlike DCM, are still kind of shying away from it. So some of the partners are secretly kind of investing in the background personally, but there's still a lot of family offices, kind of just rich angels, and the occasional fund like DCM. And then there are some cannabis funds that have popped up, but how would you, I know you kind of touched on it before in terms of like at least the seed round, look to your network and friends and family, but if you were going out to raise in the cannabis industry, sort of how would you identify and then try to get in front of these kinds of people?
I would go and I would actually create a list of about 100 potential investors, and with that, write sort of why you think they would invest, whether they've invested previously, whether they're through your network and they just want to invest in you in the space, and go and create that list. And it's going to be different for everybody. I mean, there's a lot of resources out there, from PitchBook to Crunchbase to talking to your network, talking to your attorney, when I was an entrepreneur, I really just used my entire network to kind of find investors that I thought really kind of were interested in the vision. I would actually recommend, I would not necessarily recommend going to a lot of conferences. There are actually a lot of cannabis conferences out there, but there's a lot of noise. But there's a lot of information online about folks that have invested in the cannabis space or expressed interest. And then once you've come up with that list, finding warm intros is always better than cold emailing. And so finding a way in kind of shows resourcefulness. And then with that, you might want to share some information on the business, maybe like an intro deck with a few slides, but not necessarily your entire pitch deck. Just because you could sort of really think about it like a funnel. And so, you kind of alluded to this earlier, Jason, but things like there's a lot of family offices, there's a lot of individual angels. AngelList is actually a great place to find angel investors. And if they have any cannabis investments at all, I would put them on that list and really go from there.
Sounds good. And then let's say you found some people and you're lucky enough where maybe a corporate strategic wants to get involved, maybe there's a family office and just maybe some wealthy individuals. how would you sort of, as a founder, pick who can, bring, especially the cannabis space, bring the most value to helping you scale your business, whether you're at the seed stage versus closer raising B, or maybe even an A?
Yeah, I think that the reality is that it really depends on like how much demand there is for your round. If there is a ton of demand and you're totally oversubscribed, then you optimize for other areas such outside of capital, such as valuation, terms, and then investors bringing value add. Oftentimes at the seed stage, that's more of a luxury, and you're looking for capital that believes in you, believes in the vision, and sometimes is just sort of not like disruptive in terms of having a different vision for your company than what you have. And so I'd say at the very early stages, you're sort of filtering for investors that you believe are really tied to the vision rather than, hey, they can help me with like 6 different things. And that becomes more of a nice to have. But again, if you run a proper process over a certain period of time, let's say you budget 4 to 6 months, then you can afford to be more patient in that you're not just taking the first capital or first term sheet that comes in, but you're running a very thoughtful process. And generally at the very early stages, they tend to be party rounds, which means that there's multiple investors involved. Maybe you have a lead, maybe you don't have a lead. You don't necessarily need a lead at the seed stage because oftentimes they're done on safes, which means you can close as the capital comes in and the docs are signed. And so that process allows you to be a little bit more thoughtful around how the round composition happens and over a longer period of time.
Cool. Sounds good. All right. Let's talk a little bit about DCM. Let's assume somebody today wants to get in front of you guys. What would you recommend that they do?
Well, definitely a warm intro really helps. We've been in the venture business for a long time, so there's been a lot of folks that have worked with us or interacted with us in some capacity, and anything coming through a warm intro, we generally are, we look at much more than something that just comes through, our standard info@dcm.com. To give you a sense, like we do actually screen every email that comes through. So even if it's sent to info@dcm.com, we'll generally have like a junior analyst or an associate kind of filtering those, but there's a lot of noise there. If you can get an intro into any of the investment team, that's really helpful. But now, assuming that you get in the door, like what types of investments are we looking for? Given that we're an early stage venture capital firm, most of the capital that we deploy happens to be at the seed, Series A, and Series B stage, and generally technology focused. So with cannabis specifically, there's a lot of investments happening at the kind of cultivation level, happening with the multi-state operators that are really focused on getting licenses and getting into more states. We generally don't invest in companies that are just core sort of brick and mortar. There needs to be some sort of technology angle, whether that's around payments, whether that's around software, whether that's using software to deliver a fundamentally better experience. And then and even sort of on the brand side, where brands, CPG brands are sort of not necessarily core technology, but we see that they can potentially use technology in some way that like changes the consumer experience. We'll look at those as well.
Cool. So I guess just maybe building off that a little bit, is there anything that you've seen recently in the industry, just like a trend that's really sort of excited DCM, saying like we'd really like to explore where this is going in the cannabis industry, or whether it's playing or not?
Well, we're incredibly excited about all of the developments happening in California. With California having been rec now for 18 plus months, and really kind of moving into the mainstream, it leaves opportunity to build really kind of like new brands that are category defining, that consumers really want. And we're starting to see early semblance of that. I think Doses has done a great job. We have one in our portfolio called Kaizen, which recently launched S-Shots, which is sort of like a 5-hour energy drink type alternative that is CBD and THC infused. And so we're really excited about the trend towards mainstream consumers coming into the space and the different potential on-ramps, whether that's beverages, whether that's for non-flower. And then secondly, I think that there's still a lot of room around software type investments and logistics and those areas where, as the industry is growing, a lot of them don't necessarily have access to the more traditional ways of non-cannabis companies doing things, whether it's financial services, whether it's logistics. And the big question there is like, can you build a big enough company and build a big enough brand before full federal legalization, at which time we know that there'll be a lot of quote unquote mainstream companies that aren't in the space looking to come in.
No, I think that's a good point, because I was actually going to follow up if you didn't kind of address that. Because I think there are some tech companies in the cannabis space that are saying like, I have this software, but it's the cannabis equivalent of what's currently in like traditional tech communities. So, for example, like QuickBooks for cannabis or something like that. Because once it becomes fairly legal, if I were an investor, I'd be saying like, well, isn't QuickBooks just going to come in and kind of just take over your market share? So it's like, how, I think that's a good point, is like, how do you prove to investors that you can build your business quickly enough that at least maybe QuickBooks comes in, maybe acquires you instead of, in order to get that market share?
I think that's a great question. It's something that I think about all the time. And I think it is actually one of the challenges of investing in the cannabis tech space, in that we'll look for software companies where the product is differentiated enough so that even in sort of full competition, cannabis companies would select this vendor over another vendor, right? And what that means is that they have vertical specific features that are clearly differentiated that will take some time to build, right? So I'll give you an example. If it was CRM, for example, like why would a cannabis dispensary or cannabis related business pick your cannabis CRM over a Salesforce once Salesforce is kind of like fully in the space and marketing in the space? Are there industry specific, vertical specific features that you can build that just make the experience a lot better? And I think that there are certain sectors where that makes a lot of sense, and there's other sectors where it's less clear.
Cool. And then real quickly, are you guys looking internationally at all? So for example, over to Japan or China or even South America to see what interesting opportunities?
Very, very opportunistically. I mean, our core markets are really the US, China, Japan, and the cannabis market in North America is just so much bigger than any other market. We're going to be focused on this market for quite some time, and particularly focused, I think, in a lot of ways on California. We are really excited about the trends in CBD, given that CBD is in a lot of ways further ahead than THC in terms of federal legality, federal recognition. There's still some uncertainties, but we're really excited about the prospects of CBD products getting more into mainstream. I think that traditional private equity investors are really excited about the international opportunity, whether it's Germany or the Netherlands, Colombia, sort of coming online from a cultivation perspective. There's definitely a lot of investor appetite, but from like the pure venture tech perspective, we're very focused on North America and particularly the US.
Yeah, I mean, I think if you can own the California market, it's going to carry over pretty well.
Right. California continues to be 40 to 50% of the market.
Yeah. Okay. So let's kind of transition. I think we touched on maybe a little bit, but how should founders start thinking about how to value cannabis business? Because I think, the last few years people said, oh, I have a permit, my business should be worth, it should get a premium. But at the same time, you've now started to have businesses, for example, there's a ton of brands that are coming onto the market now that don't have permits, but they're able to sort of do like white labeling deals to get out there, and the barriers to entry there is a lot lower. So should there really be, for example, a premium on a permit, do you think?
That's a great question. It's one that I think about often. The reality is that today having a permit generally is, in most scenarios, better than not having a permit. Getting granted a permit is an arduous process. It gives you the permission or the license to operate in the state very clearly. And so as a result, as this market is growing very quickly, you are seeing a lot of M&A happening because of, primarily because of the permits. And I think that that's not something that you can hang your hat on. I don't think it's something that alone drives tremendous enterprise value. And at the end of the day, it really is about building a sustainable business. In terms of how cannabis companies are valued, it really is dependent on several factors. One is, are you building a software business or a more traditional brick and mortar business? Brick and mortar businesses will trade at a lower multiple because of the margin, ultimately. So I don't think long term, that these businesses are valued differently than traditional businesses. I think that in the short term, there is certainly a cannabis multiple and a cannabis discount at the same time. And what I mean by that is that if you have a business that is growing nicely with a very strong team, and you found some product market fit and you can show numbers of growth, we're seeing those businesses trade at higher than software multiples. If you are an early stage company where you're trying to raise your first round of capital and you're not getting a lot of interest from investors, we're seeing a cannabis discount. And that's just a function of it's a specialized area that not everyone is open to investing in. So it's a little bit of like a unique situation in that we are seeing companies trade at very high multiples, and at the same time we're hearing of companies where it's really difficult to raise capital.
Yeah, for sure. I think for some of our clients we've sort of seen that as well, where especially early stage, it really is dependent on the founding team, because especially in this industry, you have to be able to, like we've talked about this before, to be willing to run through walls. This is not an easy business to be in. So I think the more that you can sort of get that credibility initially, you can start to look more at sort of those traditional, maybe sort of tech valuations, or even a little bit more if you get lucky.
Yeah, and I think that's also a function of cannabis entrepreneurs. It's really hard. I mean, starting a company in cannabis is much harder than other industries because the traditional resources that any typical founder can just doesn't exist in this space. So, for example, getting a bank account, for example, finding an office. There's a lot of landlords that don't want to rent to cannabis businesses because it's unclear on A, their stance, and B, the differences between state and federal regulation. And so if you are able to kind of prove out that you can do all these things, again, I think that it just shows that you've run through barriers, run through walls. And if you've built a really nice business, that's where you're seeing these premiums.
Cool. Well, let's talk just briefly about regulations at a high level. Obviously, EASE is a big player and does a ton in terms of its political lobbying and all that sort of things. But sort of what has been your take on sort of where the regulations are going and how that potentially affects your investment thesis? And I'm sure you learned a lot on the way just working with EASE.
I think that it's always sort of one step forward, two steps back, then sometimes two steps forward, one step back. I mean, it's very uneven in the way that that states and federal regulators are thinking about it. I mean, there's obviously some legislation that's going through Congress at the moment with the Safe Banking Act, which the vast majority of kind of the banking lobby is behind because of the burden of sort of having to manage something that is Schedule 1 on the federal side, but then is legal at the state level and leads a lot of uncertainty. I think the Safe Banking Act will do a ton in terms of kind of federal recognition of people that are just trying to build their own businesses. And then the big one is really the States Act, which is also through Congress. I think will probably not get passed this year, but there's discussions around whether it could potentially, it's a strong potential for 2020. And there's a number of different regulations that are out there. There's obviously the passage of the Farm Bill, which explicitly calls out hemp as permissible, but still there's still unevenly regulated. I think that once there becomes federal legalization, there are a number of the existing players. I think it's both a benefit in that like there's just you have access to more traditional resources. There's a lot of kind of awkwardness around like filing and paying for taxes and what can be deducted around some of the those regulations. So I'm not going to get around, which sort of largely go away. But you're also probably going to see more competition. So in a highly regulated and unevenly regulated industry, you're going to see opportunities to build a business. It's going to be hard, but you're building a business in this space and kind of building a lead before more competition comes in. So it's a double-edged sword.
Yeah, for sure. So I guess one last question. I mean, do you think that legalization will come down the pipeline during Trump's presidency? My thesis has always been like it's his like Trump card to get
Right.
reelected.
Yeah. So one of the things that I've learned having been investing in the cannabis space now for going on 5 years is that it's impossible to predict what's going to happen. And I know that sounds a little bit like a cop-out answer, but I'll give you like the example that we thought that New York and New Jersey would turn in 2019, and it's looking like it's not. And Illinois was not on anyone's radar, and Illinois is going to come online January 1st of 2020. And so things just change so quickly in this space. Like, do I think that what do I think of Trump and his stance? Like, I think Trump is, at his core, a businessman, and I think that like he has not expressed any sort of strong opposition to cannabis, and I think that one possibility is because virtually every major Democratic presidential candidate has come out in support in some way, that like he may decide, hey, maybe I'll try to get something done before the election. I think the fact that it's a core issue in the 2020 presidential debates is a positive for the industry.
Cool. I think we had like one or two quick questions that we can turn to. I think you kind of already touched on this earlier, but maybe you want to expand on it. What do you think sort of like current institutional investors in the space? Like, are they, and sort of what opportunities do you think that they are looking at as sort of the go-to sort of plays that in the short term versus maybe next year or something like that?
I think right now there's been a lot of interest in enabling technologies, especially amongst funds that are quote unquote sort of cannabis focused or looking at cannabis but not necessarily plant touching. And those would include folks like Casa Verde, like Poseidon, like others that we've kind of co-invested with. There's been a lot of interest in technology enabling solutions, whether it means better dosing technology or better supply chain software, even sort of like talent performance management, whether it's around recruiting, retaining talent, or sort of evaluating kind of through the supply chain that people are being efficient. We're seeing a lot more interest there, and I think that's a function of there are just thousands of people entering the cannabis space, every day, every week, and with that there's greater demand for software and tech. So we are starting to see, still early, but a lot of interest there. And we're starting to see a lot more consolidation. There's a lot of interest from the large MSOs to move further up the stack. And what I mean by that is, like, historically, it's been about cultivation. It's, as you mentioned, kind of around having permits, and then around production. And now people are moving up towards, like, how do we launch brands? And that's why DCM is so excited about brands, because, like, that's the next iteration. Like, right now, if you were to ask a typical cannabis consumer, they probably can't even name, like, 5 brands that they like. They keep changing. And I think that over the course of the next year or two, you start to see real brands emerge.
Yeah, I was actually having a conversation with one of our clients, I think a week or two ago, about sort of, they actually flipped that. They said that that's a great thesis as well, but they were interesting because they said, while that is a bigger market of like how do you crack sort of just not the everyday user, but that person who's going to use maybe once a week or a few times a month. That's sort of more of like the Bud Light drinker versus maybe somebody who's going to drink like a super bespoke like IPA kind of thing. And he said, we want to just own sort of the heavy user market.
The whales.
Yes.
Yeah.
Because we know that they're bullish on the fact that they can make a product that is so good that they can be like the best in this product category for the heavy users versus somebody who they just were like, that is a great market, but they still weren't perfectly sure on that. So I thought it was interesting. So I haven't heard that opinion a lot. But I think we are just about out of time.
All right. We will wrap it up.
Thank you
Thank you guys so much.
Thanks for coming in, Kyle.
Yeah, my pleasure.